expectation that margins perhaps would be steadied after all the input price pressures we've seen over the last couple of quarters. But let's get this to Abneesh Roy of Nuvama Institutional Equities, who's also getting the numbers that we're getting. Abneesh, good to have you with us here. What do you make prima facie of the numbers? We have operating profits, margins, and revenue so far. Go on.
Right. Yeah, so versus our expectation, the numbers are largely in line. Versus street, you're right, it is a bit lower. Especially after the very strong numbers from Tata Consumer and Nestle, there was an expectation that maybe there is a beat here also. But for HUL being such a larger category, and there were still inflation in parts of the portfolio like detergent, foods, etc., it's slightly lagged effect also. And important to note that for HUL, even in base quarter, the margins were still on the higher side. My sense is from Q1, you will see the improvement in trajectory in terms of margins. And clearly, the rural slowdown, which we had called out earlier also, that does impact HUL's mass end of the portfolio. So overall numbers slightly below street expectation, but versus our expectation, it's fairly close.
Okay. Based on what they have reported right now and the numbers that we're working with, Abneesh, what is the volume growth that you're anticipating? We were working with a range of around 5 to 6% odd.
Yeah, my sense is it should be close to that 5 to 6%. Of course, pricing remains a key thing to watch because there has been anniversarization in soaps. There have been more price hikes in the part of the portfolio in foods and slightly in detergent. So that remains a key number to also see. But yes, overall sales, when I see our estimate, it's fairly close. And we were also at that 5 to 6% volume growth. So it should be similar. But yes, pricing growth remains a key monitorable, and we'll have more clarity once we have that.
Domestic volume growth at 5%, Abneesh. That's what's coming through.
Okay. Yes.
Yeah. So I think this is around what was being expected, right, Abneesh?
Yeah, 5 to 6% was the number, the expectation that built in. Yeah. Of course, this quarter, if you remember, Feb and March, the royalty was also higher. So that also there is going to be some impact in the miss. That also will be part of the reason. And of course, as I said, in detergent and food, still it was inflationary.
Okay. What are your expectations in terms of margins going forward, Abneesh? 23.3% is what they've reported this time. As we go into FY24, what are the headwinds that they could probably face and the range that you're anticipating?
Yeah, I think clearly for some FMCG companies already margin recovery has started. So we would see that from Q1 the margin trajectory will go up because packaging cost and palm oil cost clearly is down. We also need to see El Nino, how does that impact HUL's food portfolios, raw material in terms of milk, wheat, etc. Wheat initial data was quite worrying, say 3 weeks back, but now the way the outputs are coming, it seems quite better than initial expectations. So yes, I would expect HUL to come back to the 24 to 25% EBITDA margin in the coming quarters. So I don't see a problem there.
Is there a change in your pecking order after you've seen the likes of Nestle report, a very good set of numbers?
So yes, our top picks, Tata Consumer is also good. But yeah, in our top picks, we have ITC, Britannia, GCPL and HUL. So as of now, no. But yes, Nestle did report better than expectation and Tata Consumer also. So overall, yes, we are seeing that some companies already are seeing benefit of the gross margin recovery. In HUL's case, as I said, the base was also on the higher side. From Q1, the base effect will definitely help HUL, and also the full benefit of the lower cost should help also.
Okay, I'm going to change track now. Okay, all right. Positive on HUL. Not too worried about the margins. There is gross margin recovery, which you are noticing in the FMCG space. So they should probably revert to margins of around 24 to 25%. But I'm going to change track, Abneesh, before we let you go and quickly ask you about this possible impending deal between Godrej as well as Raymond for their consumer brands. What are your preliminary thoughts on it, albeit on the fact that it goes through?
Yeah, in any M&A, we need to wait for the actual deal to happen. But yes, definitely deal value and valuation will be key. My sense is because of the liquidity dry up, valuations in general in M&A has corrected. So that's one thing. Clearly, the scale-up of distribution will be a big opportunity for GCPL if they acquire because GCPL has got a much wider and deeper distribution, so that should help. In terms of other issues which we'll track is how does the brand architecture work out, because same brand of Park Avenue is there in apparel also, in Dio also. So we need to see how that pans out, and is there any royalty connect or royalty agreement also. Apart from that, definitely is the acquirer going to be interested in all parts of the portfolio? How is the gross margin, EBITDA margin? So overall, valuation is key because the acquirer will have ability to scale up, but then it has to be a rational multiple rather than on the higher side. So anything in the 3 to 4x EV to sales, I think that would be a reasonable price given the valuations for M&A have corrected.
Sorry, 3 to 5 EV to sales.
3 to 4x will be more reasonable for us.
Okay, all right, fair enough. By the way, Abneesh, just a correction. I think the 5% growth, volume growth is for the full year. For the quarter, it's 4% for HUL, volume growth. So that'll be a little lower.
It's slightly below, yes. Then it's slightly below because street was at 5 to 6%.
Yeah, got it. By the way, do you track, just to go back to Raymond, do you track Raymond, Abneesh?
No, we don't track Raymond. We track Godrej Consumer.
Godrej Consumer. Okay, got it. I mean, the Raymond stock is the one which has gone absolutely, 40%, as I said, very quickly in the last month and a half or so, and of course, more over a longer period of time. Abneesh, thank you very much for running us through what you're making of it. We'll, of course, track the deal. Abneesh saying anything between 3 and 4x EV to sales would be the right kind of multiple in the current environment in that business. We'll slip into a quick break here in the first of the show. But the markets, right there, 30 points, 17,844 is where the index is at this point in time. We are back with more on market, specific stock action, more earnings, of course, which we'll put the spotlight on in just a bit.